think we've seen a very interesting shift in secondaries, where previously it was LPs trying to kind of come away from underperforming assets. And now we're seeing a bit more of a nuanced kind of rationale around that. Of course, liquidity is top of the list, but there's other reasons as well why LPs choose to engage with the secondaries market. And that can be anything from regulatory pressure, where LPs themselves are regulated financial entities, or the need to sort of mitigate risk related to a specific vintage, strategy, geography, and related to that, rebalance the portfolio. So effectively pull back on certain exposures and be able to then double down on others. For us specifically as a development finance institution, our role is to help mobilize capital into our market. So why we engage with the secondaries market is, one, to help this nascent piece kick off in our geographies, which is where it's still early days relative to, for example, Western economies, where secondaries are slightly more vibrant. And the second reason is also to mobilize fresh capital. So we've seen LPs enter emerging markets as a result of some of the secondary transactions that we've helped facilitate. And that then also means that our GPs are able to attract fresh capital into their new vintages. So staple transactions allow GPs to attract primary capital into new funds that they're raising. So co-investments are a core part of our strategy at BII when it comes to venture capital. We effectively start by making LP commitments into funds across our markets, and this can be non-sector focused funds as well as specialists. And that then allows us to track a very wide, vast portfolio from which we can then pick and choose which investments we want to come into directly. So the beauty of this co-investment strategy is that we can learn, track the market, build out our investment thesis within the verticals that we care about, and effectively build our own conviction over time, as well as the borrowed conviction that comes from our GPs as well. And increasingly, co-investments are becoming criteria for GP selection for us, and in fact many other LPs out there as well, effectively to say, this is our portfolio today when it comes to indirect exposures. What are the gaps that we want to plug? And where does a new GP relationship help us build out access, whether that's a new sector or a geography that we want to deepen access into. We also think about this on re-ups. So with existing GPs, we're increasingly starting to think about co-investments to paid-in ratios, i.e. how many dollars have we directly invested alongside that GP relative to how many dollars we've put into their funds to date. Yeah, that's an interesting one. I think from a founder perspective, they like being able to tap into their GPs, LPs, as direct investors. And so we've seen growing interest in engagement from founders in our indirect portfolio, where over time we're able to build a relationship directly and eventually make an equity investment. So they like being able to access other capital and other types of capital as well, because as a development finance institution, we're of course making equity investments, but alongside that bringing a lot of other value add, whether that's in the form of technical assistance or blended finance. That's the financial piece, but also other types of value add include the kind of expertise that we bring on the environmental, social governance side of things, on business integrity and on impact. And so this is something that founders, even at that very early stage, value and look to us to bring. I think we have seen a very dramatic shift into agri-tech and climate tech. If we take agriculture across India and Africa, it's a sector that hasn't shifted for over 7 decades or so. And now what we're seeing is a bit of a leapfrogging when it comes to new technologies and established companies engaging with startups and innovations to see how they can disrupt and transform their own businesses to be able to adapt to climate change. So adaptation and resilience is something that we try to invest and back. And then from a mitigation perspective, EV is solving the climate change issue, but at the same time providing commercial solutions to small businesses, whether that's two-wheeler battery swapping in India, which we've backed, or two-wheelers on the continent, on the Africa side, where platforms that work with delivery drivers are now thinking about moving into EV as a solution.